China. China because China. China. I love them. China now. China.
China. Should you be worried about China's economic collapse right now? How big will the impact be on the global macroeconomic and crypto market? Or is it already priced in? And in that case, when is the time to buy? In this video, I'll try to answer those questions. I will give you a Bitcoin and Ethereum TA update, and then I'll share another Swedish August tradition with you that I think you'll enjoy, with a deeper message. Bitcoin, Ethereum and the whole of the crypto market has dumped more than the stock market has. And while the stock market has dumped badly, yet it's only down half the distance of previous major crashes. So there could be a huge distance down yet to come, if history is any guide. And looking at the grayscale discount, that prices Bitcoin at 13,900. Last week we explored the fear of Mt. Gox coins as a cause, and I think we settled that conclusively. So, what is really going on then? Well, the Fed economic policy decisions isn't enough to explain what is going on. I see this so clearly, while it seems to elude many US analysts. Here's a picture that has guided me well for a very long time. Share of world real GDP, Asia, Europe, Americas. But first, how bad is China's economy right now really? The Chinese economy still expanded 0.4% from the same quarter last year, but that was the lowest growth since the first 3 months of 2020, when China shut down to contain the pandemic, and its economy shrank for the first time in 28 years. But then it recovered almost immediately. But the current outlook is not so promising. China had a goal of 5.5% GDP growth this year. Unemployment is close to the highest level ever at 5.5%, which doesn't sound that high, but for job seekers aged 16 to 24, which includes the college graduates, the employment rate was almost 20%. There's a new phenomenon among Chinese young people called lying flat. A lot of young Chinese are rejecting the party's ideal of working hard, having kids and being obedient. Retail sales, which means how much consumers are spending, fell 4.6% from last year. But do all these boring statistics really matter? We're only interested in Nasdaq stock and Ethereum. What about the next Fed meeting? It's Jerome Powell that decides. Well, a key reason why Sweden has the most multinational companies per capita in the world, with IKEA and H&M and Ericsson with 2G, 3G, 4G, 5G and Spotify and Volvo, ABBA, you name it, is that we from the beginning realized that we're a tiny, insignificant country in a remote corner of the globe. If we don't look out globally from the start, we'll never make it. I feel that many US analysts are still making this classic mistake of underestimating the impact of events far away, like in Asia. Today that is a catastrophic mistake. Some years ago you could get away with it. Let me explain why, so you never forget it. I grew up in a small town in Sweden called Mjölby. No, not that long ago, come on guys! Still, at that time, each country was like an island. Driving to Denmark for vacation with my parents, it was vastly different. Later, when I went studying a year in Germany, I went there with my suitcase on a night train with a physical map of the city. I did get a landline phone in my room, but I wrote letters to my girlfriend, which I posted with a stamp from Deutsche Post. Germany was like a different planet. And later I went to Spain. That was like a different galaxy. The women were different, hair flying, everything was different, and I loved it. Overall, I've lived in 10 countries, most of them in Asia. Some were very different. This has changed. Recently, if I go to any country now and hang with people with similar interests as myself, it feels like we're the same. While if I go meet someone from the street in Mjölby I grew up on, we might not understand each other at all. What has happened is that the world has become more global. As a result of internet, global telecommunication, global media, global internet platforms, more travel, more digital lifestyle, the world has become more interconnected, more global. And Bitcoin, which is global money, is really just the next step on that journey. While the little islands of uniqueness were very charming, I liked it, we can't undo that now. There is no going back. So look beyond your country. The Chinese housing market is still a mess. Many home buyers across China are refusing payments on mortgages at homes. Why? Well, it seems pretty reasonable, because the homes never finished, because the developers ran out of funds. And this mortgage strike is pretty big, at least 100 huge property projects in 50 cities. Chinese people have lost faith in the property market and the wider banking industry. Why do I have to pay mortgage when the property I bought isn't finished? Home sales in China have fallen for 11 months in a row. And it continues. A property company in the eastern city Wuxi said that it would allow peaches to be used as down payment for as much as 188,888 Chinese yuan, which is $28,000. Another said that they would accept 5,000 kg of watermelon, because more than 22 cities have set limits on housing discounts to prevent a housing crash. Some, for example, banned discounts on more than 15%. And then, of course, we have Evergrande. Evergrande is massive, $300 billion in debt, the most out of any company in the world. 12 million homeowners live in properties built by Evergrande. That's more than the entire population of Sweden. Managing land enough to cover the entire Manhattan, indirectly covering 3.8 million jobs, which is enough to employ all of Los Angeles. The debt load is 2% of China's GDP. In December 2021, Evergrande defaulted on $1.2 billion of its overseas bonds. This did not necessarily mean collapse for the company, but the event made everyone concerned that Evergrande might default on its other debts too. And Evergrande is just one. Property developer Kaisa missed a $400 million bonds payment. In January 2022, Shimao Group defaulted on $101 million. Yusu Group deferred its payment of bonds worth $582 million. To put in perspective, real estate and related industries account for as much as 30% of China's GDP, and property developers depend mostly on credit for their projects. These loans have built up over the years. As of June 2021, the property development sector had a total of $5.2 trillion in debt. We also have to remember that a thriving economy has always been part of the bargain that the Chinese citizen accept for living under a quite totalitarian rule. And for years, property have been a key driver for China's growth, with prices rising steadily for decades. Owning properties used to be a ticket to changing wealth for the new middle class, but not anymore now. China's property sales could drop by a third this year alone because of mortgage strikes, and because people believe that the developers won't complete the pre-sold units. And China's new home prices fell for a 10th month in a row in June. And with economic trouble comes social unrest. First the housing market, then the job market. Also, Chinese citizens don't seem to be too pleased with the zero COVID policy and lockdowns now, especially with almost all countries in the world going back to normal. In Shanghai's lockdown earlier this year, 26 million citizens were under lockdown. Guys, there is no Chinese policy decision or Fed policy that can change the fact that if everyone stops working, stop producing, there is less money. You can't redistribute yourself out of that or policy yourself out of that. No work means no money. It's really that simple. So how worried should we be now with the situation in China? Are we expecting a deeper crypto crash? Perhaps looking more like 2018? Let's quantify. Evergrande had about $60 billion in market cap before the fallout. If we look at the top 10 Chinese companies by market cap, we'll see that number 10 has $138 billion in market cap. However, as you remember, the size of their debt is at 300 billion. That's even more than the total market cap of Alibaba, and only less than Tencent and Kuaishou. However, this does not seem so big compared to many US companies. But here's the thing, that you who have been part of the crypto market for some time realize perhaps better than most stock market players. Share price isn't only based on fundamentals, it's also speculation driven. For a long time, the crypto markets operated pretty independently from the traditional markets. But in the early COVID phase, the crypto market became more correlated to the traditional stock markets. And while the economy was coming to an almost standstill here in the spring 2020, stocks and Bitcoin and the entire crypto market started a giant bull run. As you remember, Lars Online flipped gold here at, what was it, 8,700 something, and stocks followed, even though arguably the fundamental economic problems had already started, because people stopped going to work due to the lockdowns, even though we had strong evidence here from Sweden that it wasn't necessary. But most of the world continued these practices throughout 2021, while the markets continued to rally. It's called market speculation for a reason, guys. And this is important. During the crypto bull run, the number of traditional financial institutions that came in and started investing increased, and more accepted crypto to be an asset class of its own. And now, with the economy getting hit by the Evergrande fall and the wider China's economic collapse, most of these institutions will suffer as well. This means decreased investments in crypto, withdrawal of money, as banks will be limiting the loans due to this credit crunch that's happening. 31.82% discount gives Bitcoin a price of $13,900. One counter-argument is that Grayscale might have a hole of $1 to $2 billion from a bailout, so that this is not completely reflecting the Bitcoin price. But even if we deduct that, that doesn't really change the fact that institutions are withdrawing and willing to sell at a big discount. The crypto market is a simple function of demand and supply. There is no fair value similar to stocks. A withdrawal of money from crypto investment means that the token loses value. If you have been wondering if Bitcoin is recession proof, you should know it is not yet. Looking at the magnitude of these problems in China, we have to realize that even if you knew what the Fed will do tomorrow, in reality, you, me, and everyone else here have no idea how bad this global macro situation can get. If this piles into a real continued recession, in that case, this can get bad. Lockdowns are bad for the economy, and it might take time for trust in the economy to come back among young Chinese people. The only way you can handle this is to trade in possibilities. And there is a possibility that this gets worse. For now, Lars Online for Bitcoin is down. Ethereum versus USD looks garbage. Rejected at resistance. Head and shoulder. Garbage. But guys, as I've said many times, it's very difficult to trade ETH versus USD. I'm working on a dedicated Ethereum video, but in short, stick to the ETH BTC right now. But, and this is why I spend some time talking politics here. Clearly, the Chinese politicians are under pressure for the first time in quite a while. Similarly, the political pressure on the president and party in the United States is increasing. Make no mistake, they will sell their grandmother and the future of their children to stay in power if necessary. If they need the markets to turn around for them to stay in power, they will sell out the future to make the markets turn around today. And if that happens, we might get a turnaround, even if the economy is still bad. Remember what happened in 2020? And if that happens, that will be reflected in a trend change in the chart. And that's when I will buy in. That too is a possibility. In these situations, it's better to identify the possibilities, the scenarios, but then be humble to accept reality for which one of those will actually play out. I need to be humble that it's the market that decides what is happening, not my opinion about it. You've seen firsthand how reactive models have beaten all the predictive models this year. Now finally, to the most important part of this video. Look beyond your country. I hope You will like it. Okay, so this is how you eat crayfish. The claws can be a little bit hard. Beginners use a nutcracker. Pros use a bucko, like this. But the real Swede...
I do that also.
Then you open it like this. You take out this one, you bite off. This is so good. What do you think?
Very good, especially the bigger one that you said is from Newbie, right?
The bigger one is better. Was it Milby? And City of Larson's hometown. It was better.
Okay.
And if that's not enough, we also have this. Skål!
Yeah. They look like a giant donut.
Cây cơm nguội vàng Hà Nội mùa thu Hà Nội
Mặt nước vàng
lấy bờ thu
xa mời
gọi
trả lời cho tôi.
Còn đá cái gì
Đấy là bia.
Thank you, tack. City och Larsson out. Hej då.